The Kansas City housing market just shifted again. And Jordan, I know we've seen a lot of shifts this year. They're anything but over. In this video, we're going to break it down. Why are mortgage rates going up when they should be decreasing? If you stick around to the end, we've got three major takeaways. If you have any plans on buying or building a home between now and the end of 2025, you won't want to miss those. Before we get started with the first part of the video, welcome to the channel. My name's Nick.
I'm Jordan.
We help people buy and build homes in Kansas City. And without further ado, part number one, the mortgage rate drop that wasn't. Jordan, we're going to put a chart on the screen. Everybody's expecting the rate decreases, and they have spiked up pretty quickly, 6.25% all the way up to like a 6.8, 6.9%. What in the world is going on here?
Yeah, so about a month ago, the Federal Reserve dropped rates half a point. And what happened is the market anticipated this and mortgage rates went down and they dropped down to about 6%. Since then, we've had, good economic numbers come out, good jobs reports, and the 10-year Treasury, which is what mortgage rates actually follow, went up. And that's kind of caused this increase.
Yeah, so really the root of what's going on here is you've got mortgage rates and then you've got the federal funds rate. These are two different things. Mortgage rates are kind of correlated. They've got a relationship with the federal funds rate, but oftentimes they're pricing expectations in what you've seen over the last week or two that kind of spike upwards. They're pricing in a more conservative approach to decreasing the federal funds rate. We're going to put an article on the screen. This is from marketwatch.com. It's titled, Why Mortgage Rates Are Back Up to Nearly 7%. Joy, what I like about this article is it really dives into all this, and it even gives us a prediction at the end of where we might end up. And I know you're wanting to see something in the 5%. I think like a 5.5% is probably reasonable this time next year. But here's what the article says, and exactly what you mentioned. It says 30-year mortgage rate moves are not directly tied to the Fed's rate cuts. They move in anticipation of what the Fed will do next. So you mentioned rates are currently going up. They're anticipating the Fed maybe being a little bit more conservative, a little bit more cautious when cutting rates. In this environment, what do you think that does for the housing market? Does it turn people away?
Yeah, so we've been used to these lower rates for so long, and they just jumped 0.75% in a matter of weeks, and that's could be potentially hundreds of dollars in a mortgage payment. So really affects people's pocketbooks.
Right. And especially right now where it's not just the monthly housing payment, it's also home prices are going up at the very same time. And you might have the question, should I buy now? Should I wait for rates to drop? We're going to answer that because there's a lot to get into.
I don't see our market here in Kansas City. I don't see those prices slowing down anytime soon.
So it's really a double-edged sword. It's not just home prices going up. It's not just mortgage rates going up. It's a combination of both of those plus a housing shortage. That's what's making things so difficult. We're going to kind of resolve some of those things and really give you some takeaways here in a moment. But the article continues. It says, the better the U.S. economy performs, the less likely it is the Fed will cut interest rates. They cut too quickly, it could reignite inflation, which George,
we do not want.
We do not want. It would make everything worse. So it goes on to say, patience could likely pay off for those who wait. Mortgage rates are still expected to generally ease in the coming months and into next year. Fannie Mae expects the 30-year mortgage rate to fall below 6% by the start of next year, 2025, and to drop to 5.6% by the end of next year. Jordan, what do you make of all this?
Yeah, so touch on a couple of things that you just said there, Nick. Inflation. I think the last piece of data I looked at, we were hovering around that 2.5% range, and the Fed wants to get that down to 2% or below. They also look at unemployment, right? And as far as the rate cuts go, 5.6% next year. That'd be great if we can get to that by the end of the year. And I believe that their dot plot and a lot of the predictions by like the Mortgage Bankers Association expects them to be 1 full point lower at least.
Absolutely, and that would change quite a bit. But obviously the question is, well, how long do you want to wait? So we've got a few takeaways. We're going to start with the first one, which is you kind of have to zoom out. And the big thing here is you've probably been hearing rates are going to come down. And, that's the problem is the rug keeps getting pulled out from under all of us. But the reason I say zoom out is because the general trend here, Jordan, is that rates are going to come down. But there's volatility in the path towards progress, right?
So we do have the election going on right now. That's not over with. I know some people have been standing on the sidelines, waiting to see what happens. We also have uncertainty in the Middle East.
Absolutely. And, anytime there's uncertainty, markets, they can react in unpredictable ways. That's a lot of what we're seeing right now. So I think the main message here is rates are coming down, rest assured. And I know we keep seeing delay after delay, but that's the direction we're moving in. There's going to be some volatility because it's like trying to land a plane. You want a nice smooth landing, but sometimes there's a little bit of turbulence on the way down. And that leads us to the second major takeaway. Before we unpack this, any questions buying, building, selling a home in the Kansas City suburbs, please go ahead, send us an email, text message, or give us a phone call. We would absolutely love to set you up for success. What we're about to unpack is why the longer you wait, the more expensive it's going to be to buy a home. We want to shield you from all that competition. Sooner you reach out, the better, because the strategy you put in place today is exactly what's going to save you the most amount of money 3, 6, 9, 12 months plus down the road. So feel free to reach out. We can make all of this specific to you and your situation. Number two, don't catch a falling knife. Jordan, at some point, waiting, it can be a very dangerous game. The longer you wait, the more expensive, the more competitive the market's going to get, and the higher those prices are going to go. How long is too long to wait?
Yeah. So everybody's situation is different. In my personal opinion, if you can afford to buy now, I would go for it now. So like Nick touched on, you're going to have increased competition here when rates do drop and higher prices.
Exactly. And we actually have a comment on our previous market update video. I'll put it on the screen right here. They ran the math. None of this is like, laser like nobody's got a crystal ball, but generally 5 to 10% increase in prices could very well eliminate any benefit of waiting for rates to drop, even if they drop a whole percent.
And that's happening right now here in Kansas City. I mean, I look at the stats every month that our MLS puts out, and the last month, I believe it was a 7% increase in
Exactly.
appreciation.
Exactly. And this isn't, hey, buy a home for the sake of buying a home because we're real estate agents and it's always a great time to buy. It's not always a great time to buy. And what we're saying is over time, it's going to be increasingly more difficult to buy and more expensive to buy because of that competition. We've got the housing shortage, a lot of demand for homes in Kansas City. That demand's not met. And when that happens, we get bidding wars, price increases like crazy, people waiving inspections, people with nothing to lose that you absolutely don't want to compete against. So what we're saying is it's not just the cost of, maybe higher home prices, it's also the opportunity cost of waiting, because while home prices can appreciate what a good 5-10% over the next 12 months, you miss out on that. And a $500,000 house, let's say they only go up 5%, which would be a very conservative number. 25,000 bucks you missed out on. On top of that, now you've got a higher monthly mortgage payment
And
too.
a little bit higher down payment as well.
Exactly, exactly. So longer you wait, you don't want to catch a falling knife. What I would say, kind of, watch the markets, watch these videos, subscribe to the channel so you see these updates. But I would be looking to if you're wanting to buy a home in the next, 6 to 12 months or so, I would want to get in before the spring to summer rush, because that's when I think we're going to see a lot of competition in the market. So sometime around maybe end of March, early April of 2025, I would kind of be a little either really prepared, or I'd want to have a plan set up so you don't have to deal with all the competition.
All right, guys, on to takeaway number 3. Home prices in Kansas City are only going to go up. What do you think, Nick?
Agreed. Agreed. This is part of our last video. This is one of the predictions. They're only going to increase. I get that a lot of people out there are wanting to see them fall. I get it. They should, right? We're long overdue for a recession. They typically happen every 7 to 10 years. The last one we kind of thwarted because we just printed a bunch of money during COVID. Here's the problem with all of that is you've got some of these markets like Florida, a lot of development, Texas, a lot of people moving there, where they saw crazy rates of appreciation. If you think ours were out of this world, theirs were way worse. They're feeling the effects right now. Those prices are, some areas, starting to come down just a little bit. I think the major difference is that our market, we're now starting to see a lot of relocation, a lot of people living on the coast coming inwards. We're also kind of the housing shortage is propelling a lot of these home price increase. We do a lot of this new construction stuff. Even if you don't have any interest in new homes at all, it does matter for supply and demand. And Jordan, we're seeing something interesting with the amount of homes that builders are building.
Yeah. So inventory, whether it's new construction or resale, it's still pretty much all-time lows. We have 2 months supply. Um, and then like Nick said, you've got all this population growth in Kansas City, people moving here. It's just supply and demand.
And really, the growth trajectory of Kansas City compared to all the other bigger metros in the Midwest, I think is uncharted. It's untapped, and once this starts taking off, which I think it already has, it's gonna keep going for a very long time. That's because our home prices are still relatively affordable compared to some of these other markets. Now, getting into some anecdotal, stuff that we're seeing going on is mortgage rates. There's a little surge of activity, home buying activity below $1 million, right? As soon as those rates drop, we really saw those purchases start to tick up. But above and beyond the homes that are moving right now, Jordan, they're all like
$1 million plus.
they're selling like this. If you're in that range, you're looking for a home in that range, you've probably seen them go off the shelves like crazy, which proves there's a lot of demand. But those little movements to mortgage rates can really have a dramatic effect on our market here in Kansas City. That's all for takeaway number 3. We do have a prediction for you. We're going to back this up. These videos live on YouTube forever. You can go back and watch the previous predictions that I've made over like a year ago. Nobody's got a crystal ball. We could certainly be wrong, but based on the data today, Jordan, what do we think the Kansas City real estate market is going to look like in 2025?
So I think in 2025, Nick, I think our housing market is gonna be better than this year. We're really kind of all-time lows, I believe, as far as inventory goes, number of sales. With lower interest rates, it's really going to drive a lot of that demand. And there's a lot of pent-up demand. I mean, I talk to people almost every day who they want to make a move, they just can't with interest rates right now.
Right, right. So really a market that is sensitive to those changes in interest rates. A lot of people watching very, very closely. That's why it's a good time to prepare now. So if there is competition, you want to shield yourself from that as much as possible, right? That directly impacts your ability to negotiate. But we'll put a chart on the screen. Amount of home sales, I'd anticipate it's not quite going to be as hot as 21 or 2022 when rates were at like a 2%. I envy all of you who bought a home at those mortgage rates, but I think it's certainly going to be hotter than 2023 and 2024. So kind of like a Goldilocks between these last 4 years, that big split as mortgage rates increase. So long story short, very sensitive market, especially anything below a million, very sensitive to mortgage rate changes. We likely will continue seeing luxury home sales just fly off the shelf just because the housing shortage. We got a lot of people moving here, but that would be the prediction. It's going to be an elevated market. It's going to be hotter than 2024. And for that reason, any questions at all, buying, building, selling a home in Kansas City, we want to make this specific to you. The sooner you've got a strategy, the sooner you can prepare. Usually, the better deal you're going to get. So make sure to reach out, phone call, text message, email with any questions at all. Jordan, that's it for this video. So hit the like button if you enjoyed it. We've got 2 videos on the screen that you're going to point to one of them. That is going to be the video, the recent market update video, where we made like 5 different predictions about the market. And then you've also got this one right here, the one that YouTube thinks you'd enjoy the most. So click on that one or this one, and we'll see you on the other side.